Hello there. Good evening, ladies and gentlemen, and welcome to another, pre-Chinese New Year, portfolio $2,000 cash flow session, on Fridays, live, with I'm Possible Terrence. Now, so let's get our session started in, I'm going to wrap this up very, very simply over here, because we're going to go into the Chinese New Year weekend, and many of you will be having a lot of celebrations, a lot of eatings, spending times with your relatives, with your family. Everybody's going to be busy. But let's load some cash flow, before we get there. So there's a lot of money going out because we're going to spend a lot, on these gatherings. But right now, let's focus on our money and let's build some portfolio cash flow. Okay. Now, so before I start my session over here, as you see on the banner, as per normal. If you're joining me for the first time, can you go to this website on the banner, streamyard.com/Facebook. You will see a Facebook logo. Click on it. And you'll be brought to a pop-up page. Okay, please click on the Facebook logo so that you'll approve your Facebook profile, for this software that we're using. And what does that do? That basically means that when you leave a comment, during the session, on this Facebook Live, I will actually be able to see, who's leaving the comment itself. So if you didn't do that, this is how you're appearing, on the software I'm using to stream this Facebook Live session. So please go ahead to the website right now, because as one rule I've set over here, I will be providing a lot of valuable information, for those who have joined me week after week after week, you've probably witnessed this yourself, I've been doing this for more than a year right now. I believe you're coming close to 2 years, okay, and 9 months, building this new arrangement and new direction of portfolio, that we're doing right now. Okay, now, so everything you witness, are based on the moves that I will make on my own live portfolio accounts, okay, and as a disclaimer, this is by no means any form of recommendations at all, because all forms of trading comes with a risk of loss. So you do need to be aware of all the risk involved, before placing and following any of my trades, that I discussed during this session, into your own live accounts. Okay, now, so with that over here, I hope you have get it done. So Facebook user, happy Chinese New Year. But I cannot address you by name. Now, so some of you may be asking, Terrence, why do I need to do that? Simple. Throughout my session, I'll be entertaining questions if you have any for me. But if you leave your question, and this is what I see, okay, I will not reply the question. Okay, it's not that I'm trying to be hard, it's not that I'm trying to be harsh, but I would like to know, who I'm replying the question to. Okay, so if you can, please go ahead and approve your profile, so that when you have any questions for me, I can help you in the best of my ability. Okay, now, so let's get our session started. And yes, I didn't forget, I'm supposed to remove the banner. Yes, I've done it. Okay, okay, my memory didn't fail me today. And hi Nelson, hi Abby, hi Mei Ling, hi Patrick, hi Susan, hi Nian. And yes, a couple of Facebook users here and there. Now, so as usual, if you have enjoyed these sessions over here, let's try to get it out to as many people in the public, as possible over this Facebook stream. So if you could do me one thing right now, there are quite a lot of you in the room, can you, all of you who are listening to me right now, just do one favor for me, hit the like button. Okay, can you do that? Because if you can do that, that will really help me. Okay, so just hit the like button over here. It doesn't harm you. It doesn't take any pain off your fingers as well. But what it does is it helps this information, reach out to more people, on the Facebook algorithms. Yeah. Okay, now, so please do that for me. And hi, Bonnie. Hi, Eileen. Okay, now, so without further ado, it is also, today, the January monthly option expiries. So if you have traded options, you'll be familiar, that every third Friday of each month, is when the monthly option expires. Okay, so there's a lot more activity, there's a lot more volume with the option expiry today. Okay, so what does it mean for us, and what does it mean, of how we handle most of the positions or the options that we're selling, inside this portfolio. Yeah, okay, I'll show you how I handle it, I'll show you what I've done, and how I will continue to do so, so that you can pick up tips, okay, or, good practices, even though this is a free session for all of you. Now, so for those of you who are joining me for the very first time, this is a portfolio cash flow focused all right, session, all right, which means I'm not trading for capital gains. I'm not trading to look to the stock to shoot up immediately or needs to shoot up at all, right? I'm just trading with a with a cash flow target in mind. All right, now, so if you need to ask, all right, a portfolio target is $2,000 in terms of cash flow creation, right, month after month after month. All right, now, how big is this capital? All right, if you intend to, kind of mimic or follow along the way. All right, this official portfolio that we're building that you see on the screen, all right, has been started, all right, since May 2022, all right, with an original capital of $100,000. So if you worked it out, all right, creating $2,000 in cash flow makes it about 2%, all right, returns every single month. All right, now, so if you work it on an annualized return, that works out to be about 24%. All right, now, so since May, June, July, August, September, October, November, December, January. So we are into month 9 right now. All right, so month 9 would mean, all right, that we should be generating up to about what? 9 times 2, all right, $18,000 in cash flow. Right? Have we surpassed that? We have, because the portfolio has already reached $120,000 in portfolio right now. Okay, all right, now, so we have surpassed the mark. That means we're performing with a portfolio that is over 20%. All right, if we can continue to keep this up. Yeah, okay, all right, now, so if we continue to keep this momentum going, all right, okay, we will be yielding, all right, how do I say this? Yielding a return of higher than 24%. Yeah, okay, because 24% means that right now we should be at $118,000, but I'm ahead of that. I'm ahead of schedule. All right, so it's either I start missing some months, fingers crossed, all right, or all right, if I keep this up by the end of the year, we could be looking at anywhere from 26 to 30% per annum. All right, and considering what the market has done from May 2022 until now, all right, I think, all right, it's a pretty decent return. All right, I can't say it's exceptional, but I would say it's a pretty decent return, right? Because most portfolios were trading red, right, during this period of time, all right? But not only are we positive, right, but we are actually hitting, right, a more than average return, right? How much time are we spending? We spend what? About 10 minutes trading, right, during these live sessions every week, and the rest of the time trying to talk about analyzing the markets, what the market looks like, and trying to educate you in the process. Yeah. Okay. So these Friday sessions are catered for the general investing public. All right. So if there are any of my students inside my investing or trading community, all right, okay, these are not trades, right, that are meant for you. All right. Okay. Because you can do exactly the same thing, all right, with similar concepts, right, but requiring much lower capital base. Yeah. Okay. So you do not need to follow any of these trades, all right, because they're meant for the general public. All right, and the only strategy that I adopt over here is called portfolio puts. Now, so those of you who are new, all right, what is portfolio puts? All right, to put it simply, all right, it's a varied version, all right, okay, it's a varied version, my own version, I could say it, all right, of, all right, a cash secured put. Now, so a cash secured put is simply selling a put option on a stock, all right, that you do not mind owning at all. Yeah, okay, all right, but you're putting up 100%, all right, of the cost of buying those shares in case you need to. All right, so what does portfolio mean? All right, sorry, portfolio put means, all right, when I adopt this strategy, it means that when I'm selling these put options, all right, I do not allocate 100% of the cash required. No. All right, okay, I actually allocate 70%, all right, when I initiate a portfolio put position. Right, but you may be saying, Terence, what happens if all your put options get assigned? Right, that means you have to buy all these stocks. Right, it doesn't matter, because first I'm going to tell you this. Right, it's how you cater the approach. Right, we sell portfolio put options only on great companies that are already severely undervalued. Now, what does this mean? It means that these stocks have been beaten down to the ground. All right. And if you still don't realize, it means that these stocks now have limited downside, all right, versus the upside potential. All right. Now, so if you have a basket of all these kind of great stocks that are still generating profit, it means, all right, that never, all right, I would say this, okay, so far it hasn't happened. Okay. So fingers crossed. Never, all right, would you face a situation, all right, where you would end up, all right, having to own all these stocks at any one time, all right, on your portfolio. All right, so many of you have witnessed it. Yes, we have owned, 4, 5, 6 trades, all right, that we have sold put options on, all right, but many of them have been liquidated for a profit, all right, okay, and we're still in those positions, all right. So if you look at our current portfolio, all right, we are what? Holding on to 1, 2, 3, 4, 5. 5 stock positions. All right. Is that terrible? Not really. All right. Okay. We have what? 1, 2, 3, 4, 5, 6, 7. 7 portfolio, plus this month, 8 portfolio put positions. All right. So 5 stock positions versus 8 portfolio put positions. I think we're pretty diversified. Yeah. All right. So 70% of the capital requirement allocation for portfolio put position. Right. But some of you would then go on and ask, Terence, but what about all these stocks? Right. It's not fair to do it this way. It is. Why? Because once they become stocks, right, I'll show you what I do. All right. Once all these become assigned stocks, I start allocating more. All right. So when it becomes a fact, all right, I will allocate what is required. Right, which means if you look at the requirements over here, all right, what it means, all right, is that I allocate 100% of the cost of owning these shares. All right, so for portfolio puts, right, they are allocated at 0.7, which is 70% of the cost. Right, but once it becomes a stock position, I immediately increase the amount, right, and give it 100%. So what this reflects is that I'm still benefiting. All right, I'm still benefiting from the use of leverage, but I'm not excessively abusing it. All right, and that's it. All right, that comes from experience. All right, and that's something I want to be able to pass on to all of you. All right, even if you're not part of my investing community, but of course, if you can come in, all right, whatever that you're seeing on the screen right now, all right, can be replicated, right, with a simple $5,000 or $10,000 portfolio. All right. Okay. Now, so many of my students have built similar portfolios with a capital of $5,000 to $10,000. And what have they done? All right. They have followed the portfolio since August 2022. All right. And with a capital of $10,000, all right, they are now looking, all right, at a return of 28%. All right. 28% from August to now. Yeah. Okay. And 11, if I'm not wrong, about 17%. Right, of those profits are already closed. Yeah, okay. So the portfolio is scheduled to make 28% returns, right, on all positions, but 17% is already locked in, right, because we've closed those trades. Right. So we're doing pretty much fine over here. All right. Now, so if you want to find out, please send my team an email, right, on what's available for you, right, all the different mentorship programs, right, and see which ones cater best for your learning interests. Yeah. All right. So that's all said. That's all done. Let me get started with my content today. All right. And we'll start things off with the markets. Oh, man. It's lagging today. All right. Now, so this is the SPY, which means this is the stock version of the entire index. All right. Now, I use this because it makes things simpler. All right. And all right, for those of you who have followed me, do you see a similar thing happening? All right. The 200-day moving average line. Yeah, okay, the market tried to break it. It was a false break. It tried to break it again. It was a false break. All right, it broke above again, and it was a false break again. Now, so what this all means, all right, is that the economic condition is still weighing, all right, it's weighing heavily on the bullishness inside this market. All right, okay, so there is no true bull, all right, inside this market right now. Everybody's trying to buy, everybody's trying to push the market up, but they are also cautious. They are cautious of strong level points. All right, now, so 200-day moving average is definitely a strong resistance point. All right, it's proven to work yet again. All right, but now, right, because of this one-day sell-off, all right, followed by a second day yesterday, all right, we are now back at a strong support level. All right, and this strong support level is 3850. All right, so it bounced off there, and now we are at 3,900 levels again. All right, now, so the pressure point is with the option expiry today, is the market going to close back up, all right, or it's going to break below 3,800 over here, all right, and the doors will open for the market to fall all the way back to 3,600. Yeah, okay, all right, so there will be an interest rate decision coming up soon. All right, so how will that affect the markets? And we are into the earnings season. All right, so companies are full-fledged right now reporting their earnings. All right, everything is not everything is not really looking good. Right, because if you pay attention, Microsoft have come out before their earnings date itself to say that they're going to slash more jobs. All right, it's not just Microsoft. Many other companies are doing the same thing. All right, Teladoc has done the same thing as well. All right, and this shows you, right, that many companies are now suffering the weight, right, of inflation, of recession, right, things are not rosy anymore. All right, so you need to think about how you want to invest, and you need to pick your battles very, very carefully. Yeah. All right. Now, so that's why I'm concerned about the markets right now. All right. The bears still have control. All right. The bulls have overrun, right, this upside. So we are in a situation now where there's more downside, all right, than the upside potential. All right. Okay. Now, so you'll be very careful for new positions that you're gonna pick. All right. Okay. And with that, it's not gonna stop me. Having said what I just said, it's not gonna stop me. All right, because I need to get my $2,000 for the month. All right. So the question is, how am I gonna drive this portfolio? All right, keeping it safe. First, we go back to our current positions. All right, see what we can do with them, how to generate more cash flows. All right, and then, all right, we will go in and look into some new trades. Okay. Now, so this is my portfolio of stocks over here. All right, the first stock that I'm holding right now is WBA. So if you look at the charts, right, WBA has been on the downtrend. So I don't want to be selling call options right now. Right? Why? Because I actually own, right, I actually own 500 shares of WBA that cost me $45. Right? Okay. And if I sell a call option, right, the risk, right, is that if the stock suddenly shoots up, right, my stock can get taken away from me. Right? So with the stock now at 35 and is on the down move, right, I don't want to be selling any calls at all. I don't want to risk this chance of my stock getting taken away. All right, this is a great stock. Right, it's a money-making company. Right, the PE ratio is inaccurate, so ignore it. All right, okay, trades at a 5% dividend return. Yeah, okay, all right. Now, so $1. All right, about 80 cents. So let's say it makes about $1 every quarter. So this company makes about $4. Can you see that? It makes $4, right, per share in a year. All right, and the stock trades at $35. So the PE ratio is less than 10. All right, so it's a money-making company, it's a dividend-paying company, and yet the PE ratio is less than 10. All right, so that's why I don't want to be risking a jump on the upside. All right, has it done it before? Look, it has. Yeah, all right. Now, so I don't want to take the chance. Next, Intel. All right, so Intel has hit the top. All right, and now it's coming back down. All right, what does all this mean? It means that our call option, right, the 31 call strike, right, it's going to expire worthless today. All right, okay, now, so the stock is trading at 28.45. I really don't see, all right, how Intel is going to shoot up $2 and more, all right, by the close today. All right, so I'm just going to leave this to expire tonight, all right, and then we'll come back next week, all right, to see if we can add a new call option, okay? All right, because earnings is around the corner. Yeah, all right, so if it's a good earnings, all right, or better than expected, we could see a jump, all right, and break this resistance level. All right, if it breaks this resistance level, all right, it's a good sign for Intel. All right, okay, because it's some positivity. All right, okay, we can see it run right to this 200-day moving average, which is $34. All right, and it will allow us to sell some call options and generate extra income. Yeah. All right, now, so our next position, VZ. All right, so VZ is at 39.80 today. All right, do we have a call option? Yes, we do. All right, so we have a call option at $41. So I would say today, this call option is relatively safe, all right, to expire worthless. All right, so what does this mean? It means, all right, that, okay, I'm going to reload a new call option, right, to generate more cash flow. All right, so because I have healthy capital, all right, I don't need to close the one that expires today. All right, but if your portfolio is a small one, I would actually suggest that you pay this 1 cent to close the 41 call. All right, pay the 1 cent, pay the $1, get it closed. All right, and all right, I'm actually going to relook at reloading, all right, a 2 weeks call option. All right, and I'm going to choose the 41 strike again. All right, so I'm going to sell. All right, let's see, how many do I have? I have 300 shares of Verizon. Can you see that? All right, and these shares cost me $50. All right, they cost me $50. All right, so what I'm going to do is I'm going to sell the 41 call option. All right, it served me very well. Right, it is a good resistance point over here. As you can see, it shot up to about 42, right, and came back down. All right, so I would believe that 41 should do fine. Yeah. All right. Okay. Now, so let's see what if I choose a 42. Actually, a 42 is pretty fine too. All right. So let's take a 42. All right. Okay, and it should pay us about 32 cents, I would say. All right. So let's go have a look. right, so I'm going to sell 3 of these call options. All right, voila. All right, so my order is done over here. All right, so if you see the timestamp over here, it's 11:21. Our current time right now, I just sold Verizon February 3rd, $42 calls. All right, so 3 of them, right, for a premium of 32 cents. Okay, now, so I've created more cash flow, ladies and gentlemen. All right, so let's copy this, all right, and let's paste this down here. All right, this is for our 3rd of Feb. All right, $42 call. All right, I did this today, so that's 20th of January. All right, and I did this for 32 cents. So this generated $96 in cash flow, right, from this stock. All right, okay, so my monthly portfolio cash right now, right, stands at, for the whole month, right, $552. I'm 25% there. A long way to go. All right, okay, but I've got a month, so I'm not panicking. All right, so our next stock position is TSN. All right, so what has Tyson Food done for us? All right, Tyson Food, $63. All right, so the stock has bounced up, all right, and reversed, but now it's trading at a support level, all right, and not much to shout about. All right, so I'm holding this stock position, all right, and collecting the dividends of 48 cents, all right, along the way. Yeah, all right. Now, if you realize I do not include any dividends that I collect, all right, as part of my cash flow calculation. So if I add that in, my return is actually much more, right? But for the sake of keeping things simple, all right, I'm actually ignoring that. Yeah. All right. Now, so our next position is HBI. All right, we have a $9 stock position. All right, for HBI over here. All right, let's see what it's worth today. All right, HBI, it's bounced up. It's good. All right, so HBI is, whoa, that's a quick move. All right, okay, and there's earnings around the corner. So let's have a look. Nothing. 2 weeks, we can sell a 1 month option over here and generate $10. All right, I think I'm happy with it. All right, because the stock itself is not very expensive. It's like what, an $8 stock. All right, so if I can generate, all right, a 10 cent or a $10, all right, from each of these call options, all right, in the next 1 month, all right, I'm actually rooting for that. Okay, now I explain to you why in a moment. Okay, all right, so let me just fire this off first, because I have 400 stocks over here. Okay, so I have 400 stocks, so which means I can sell 4 call option positions. All right, and let's do this for 10 cents. Okay, good. Now, so I just sold, all right, the HBI February 17 $9 call option. I sold 3 of them. Oh, 3. Oh, that means I've got 1 more left. All right, I sold 3 of them for 10 cents. Okay, 10 cents. All right, so I have an order for 1 more to go. Yes, there's an order for 1 more left to be filled. Yeah, okay, all right. Now, so when all of them get done, all right, when all of them gets done, all right, I will tell you in a moment. All right, but this is how it will look like on the portfolio. Okay, so this will be position 38. Should be 4. All right, HBI covered call for 17 Feb. All right, $9. All right, done today, 20th Jan, 0.1. So the reason why I'm willing to sell the $9 call is because even if my stock gets taken away from me, all right, okay, you realize it gets taken away at a price of $9, all right, and that means, all right, that I will suffer no losses on the stock at all, all right, there'll be no losses for me to incur on the stock, all right, and this $10 that I'm getting right now is like additional cash flow. Can you see that? All right, now I did say at the start of the session, right, I'm not looking for any capital gains on these stocks. If they come, great, it's like a bonus, but I don't expect it. So my focus is fully on cash flow. All right, so if I can grab some cash flow without losing any money on the stock, I would always seize on that opportunity. All right, and that's what I'm doing right now. Yeah. Okay. All right. Now, so I'm still filled for only 3. All right. I will correct this before the end of the session. Okay. Right now. So let's go to our portfolio puts right now. Okay. All right. Now, so these 2 positions will expire today, right, when the markets close. All right, for these maximum premiums, right, and cash flows. So that's all good. All right, now, so our first portfolio positions that expire today is SWKS. All right, so where is SWKS? We have a $90 put option that we sold on 9th of December. All right, SWKS is at $99 today. All right, now I want to put a test to all of you. Those of you who are listening to me right now, okay, now can you tell me, all right, with this stock and the put option at $90, all right, the stock is trading at 99. So we have a 10% buffer and the market is already open. All right, okay, and this 10% buffer worth $9, all right, should last, all right, until the market close. All right, now, so how safe do you think this trade is? All right, that means, can I leave it to expire worthless tonight? Yeah, okay, what say all of you? All right, can you just type yes or no? All right, is it a good idea to just leave it inside the account and expect it to expire worthless when the market closes tonight? All right, type it and let me know in the chat box. I should say the comment box. All right, thank you very much, Eileen over here. All right, for fast fingers. All right, so Eileen says yes. All right, okay. Facebook user. All right, now, unfortunately, like I said earlier, all right, I cannot entertain your comment. Yeah, okay, so please go ahead to the website, www.streamyard.com/Facebook. All right, and then click on the button, all right, so that your profile will be approved. All right, so we have quite a couple of Facebook users, okay? Yeah. Okay, all right, now, so Andy, all right, if you have joined us, then you should know the drill. All right, so if your profile goes back to Facebook user, all right, I need you. All right, I need you to go to the website, okay? All right, okay, now, so EL says yes. All right, now, so there are some of you who are actually suggesting, Terrence, close the position. I don't. All right, why I don't? Because it's what? It's $1. Yeah, okay, all right, now I know some of you say, Terrence, it's just $1, but all right, if I don't need the capital and I still have excess capital in my account, then why do I need to bother? Can you see that? All right, unless my portfolio is so small right now that I need these tied up capital to establish new trades. Can you see that? All right, otherwise I'm just going to leave it because the market is already open. Can you understand that? All right, so even if the market turns drastically right now and the S&P falls by what about 2-3%, all right, for the entire day, all right, this stock may fall 5%. All right, so if it falls by $5 from here, is my put option still going to expire worthless? See that? So I said, every time you come and join me for a live session, there will be something that you can learn out of it. All right, so this goes into a golden nugget, all right, for handling expiry trades. All right, handling expiry trades. Yeah. All right. Okay. Now, so sorry, I cannot see you. I cannot. You're still Facebook user. Okay. Now, so I'm not closing this trade, but this trade will expire worthless. All right, when market closes today. Okay. All right. So we did pocket $424.50 in cash flow. All right, and this is great. Okay, now, so let's go to our next portfolio put position, right? KSS. Now, I did remember that last week I had a KSS position, all right? Okay, and I tried to sell a put option on it, all right? Sorry, I tried to move it to the following week. My order didn't get filled, so I'm left holding the stock. And as amazing as it gets, okay, as amazing as it gets, where are we now? All right, KSS, ladies and gentlemen, KSS, all right? And we're back, all right, at $30. Wow. So my put option, all right, is worth what? 4, 5, 6, 7 cents. All right. Okay. Now I do believe that this stock is going to hold today. All right. So I am actually going to leave this position right now. I'm going to leave it. Yeah. Okay. All right. But at the same time, because the valuations are still so depressed and this stock has served me so well, all right, I'm actually going to go ahead and generate cash flow on the same stock for the next month. Yeah. See that? All right, now, but I don't need to sell the $30 puts. Can I do that? Maybe I should. Because $30 is still cheap. Yeah? $30 is still cheap. I can still do that. Yeah? All right, now, so let's go ahead and do that. Yeah, all right, now, so I can sell the next month's $30 put option. All right, and let's try to see what I can get. Yeah? All right, now. So I'm going to leave the position that I have today. All right, I'll let it expire when the market's close, but I'll go ahead and sell February 17th, right? $30 puts. Okay, reestablishing basically. right? So I'm going to sell 3 of these. Okay, I'm going to try to get it done today. And all right, Andy, congratulations. Yeah, okay, all right, now. Congratulations, Andy, for getting your orders filled, yeah? Okay, good. Ladies and gentlemen, I just got my KSS order filled for 136. All right, so I basically put back the same trade, right, for next month. 3 of these options at $1.36. All right, I sold the February 17 $30 put option. Yeah? Okay, all right, now, so let's go ahead and establish that. All right, it's the same strike, just a month later. All right, so this is going to be trade 57. 17th of Feb, right? $30 strike, 20th of January today, right? At 136. Awesome. That's going to add $408 in terms of cash flow, ladies and gentlemen. Right? And where are we right now? We're at $1,000. We're at 50% right now. Awesome. 50%. Okay. All right. Now, so Susan, that's a valid question. All right, so Terrence, right, you did this on KSS. Why won't you do it on SWKS? Right, there's a logic behind this, right? Because, right, when we did this trade, right, SWKS fell, right, and now it shoot up. All right, so SWKS had a bullish run over here. All right, so it's so bullish over here. All right, I don't want to reload right now. I'll rather wait for it to come back down. All right, okay, perhaps back towards 95. Or 93, all right, then I will reload a new put option. Yeah, all right. And now the reason is because, right, technology is a technology company. All right, tech has enjoyed this bull run. Right, if you look at the NASDAQ over here, let me show you what NASDAQ has done. Look, NASDAQ has enjoyed a bull run. Right, so if technology sector starts to weaken and sell off, all right, SWKS will not be spared. Yeah, okay, all right. Now, so Susan, I hope I help you understand that. All right, okay. All right, now, so let's go to our next one. Okay, so our next position, this is expiring, great. All right, we have AT&T, all right, AT&T, an $18 put option for 28 cents. All right, so where is AT&T today? 18.92, ladies and gentlemen, and it's a safety net, all right? It's really, really safe. All right, so no qualms about it. I'm just going to hold this position, right? And now I'm just trying to see if I can sell a new 18 strike again. We got paid 28 cents the last time, right? We can get 28 cents now. So let's just do it. Yeah. All right. So can you see how, how kind of laid back this portfolio simply is? All right. One of my trade position expires or is due to expire today. All right. And what you're seeing me do right now, right, is just reloading. All right. I'm just reloading. All right. So 5 of these put options, I'm just going to reload. All right. 5 back into my portfolio. Right now, and I'll say this again, right? Because I have enough cash flow inside my accounts, right? So I do not need to close the put options, right? Because I believe that these are going to expire worthless when the market's closed. Yeah, okay. But if you're worried, right, you did see some of the comments, you can close it for like what, 1 cent, 2 cents, or 3 cents, right? Get it closed, right? If you're those that, are very worried, yeah, okay, or you're new to trading this system, yeah. Right now, so I just sold 5 of the $18 put options for 17 February, AT&T. I sold 5 for 27 cents. Yeah. All right. So that's reloaded. All right. So let's go. Trade position 58. All right. That's $135 worth. All right. Awesome. All right, so this is going to expire worthless today. '20th of Jan, not 20th of Feb. Right, so by expiry, these are going to free up. All right, so great. Okay, awesome. Now, our next position is the Dow 4750 portfolio puts. We got 90 cents for this. Where is Dow right now? Looky look, $56. Once again, a 10% buffer. All right, now, this one, I'm not going to reload. All right, now, so some of you ask, Terrence, why won't you reload? Look at the burst. Right, this market we have right now is a bearish market. So in a bearish market, you do not expect exponential moves like during the COVID period. No, you don't. This is a trading market. So whenever you see a stock did an explosive exponential move, wait for it to come back. All right, because it's a bearish market, which means we have big down days. Wait for it to pressure this stock, bring it back down to maybe about $50 or $53. Then I'll be happy to reload again. Yeah. All right. Now look, it's done this. Boom, all the way up, and then it comes back down. That's when we reload it. All right. So I'm going to wait for the same situation again. All right. So I'm going to let this trade position expire when the market's closed today. All right. For maximum profit. All right. And okay, the entire cash flow. All right. $270. Okay. Oops. It's going to free up my capital by the end of today, so that's all good. All right, now next position, DVN. All right, $55 puts for 131. All right, so this is an oil stock. All right, yes, we traded an oil stock. 55. Look, the stock is at 64. All right, we had that bounce. All right, it's all good. So I'm going to leave this position to expire today. All right, because it's trading so near 200-day moving average resistance, I'm not going to add right now. Yeah, okay, so I'm just going to leave this to expire today. All right, $262 in cash flow, a great return. Oops. All right, let's look at our last two positions for this month. JWN, $15 puts for 41 cents. JWN, $17. All right, awesome. All right, $17. So this stock is safe. All right, now, so this stock is safe. Okay, now, so let's have a look right now. Can I reload 15? 20 cents. I collected 41. So no, all right, I'm going to hang on. All right, I'm going to wait for it to drop a little bit. Maybe next Friday we get a better chance. All right, so today, no actions on this. Okay, but it's going to expire worthless by the end of today. Freeze up the capital. Freeze up the capital. Right, and our last trade, right? Meta, 105 put option. All right, and Meta is trading at 130. Yes, we nailed it. All right, we nailed it. All right, and I'm not going to reload. Look, boom, all the way up. No, now is not the time to reload. Let's wait for it to come back down, right, towards this support level, 112. Right, do I believe it'll come back down? There's a possibility. All right, okay, so we just wait. At most, I just miss a trade. That's it. Yeah, okay, I don't want to add on risk. All right, amidst this bull, okay, not a bull run, but amidst this up run. All right, okay, it isn't wise. All right, so today this trade is going to expire. All right, it's going to free up my capital. All right, and awesome. All right, so look, ladies and gentlemen, right, if all these current put options expire today, all right, my portfolio exposure right now, right, it's only going to be what? $100,000. Yeah. Right, $100,000. So we are back below 100% mark. So what does this mean? It means I have cash flow to allocate. All right, now, so I'm about what? 1,135. I need to add some more over here. All right, and today I'm going to reload, ladies and gentlemen. All right, so the first stock I'm going to reload onto my portfolio, right, is going to be the healthcare sector. All right, so I had WBA. It hasn't worked out, but it's okay right now. All right, I'm holding on to the position. The next one I'm going to do is CVS Caremark. All right, so if you look at CVS Caremark over here, right, it has all the same trades. All right, the stock is not trading at 36 times PE. This is an error. All right, if we look at the earnings, oops, sorry. Right, $2, $2, $2, $2. So this stock makes $8. In fact, more than $8. Right, for the whole of last year. Yeah, okay, or the last 4 quarters. So the stock is trading at $87 right now. So the PE ratio, right, is round about 10. All right, so this company trades at a 10 PE ratio. All right, now, and if you look at what's going on over here, okay, now, so the current, not current, all right, the PE ratio 10, right, versus his 5-year average at 18. Yeah, okay, I think that's fine. All right, I think that's fine over here. All right, and if you look at where the stock is right now, right, it has come back down, right, to quite a strong support level over here. Yeah, can you see that? All right, a strong support level at where it is right now. my platform is lagging right now today. All right, at $87. All right, so let's see what kind of cash flow can we create for the next 1 month. Nice. Have a look at that. I can go all the way to $82.50 and it still pays me 90 cents. So why not? Right, so that's about another $5 away. Yeah, okay, another $5 away after it's been smashed down. All right, so I like my chances over here. All right, I like these kind of depressed stock. All right, okay, it pays 60 cents in dividends. All right, it's about close to 2.8%. Not as much to scream about. All right, okay, but all right, it's a depressed stock. All right, so I'm going to take my chances on this. All right, so I'm going to sell. Let's take 3. All right, so I'm going to sell 3 of them for my portfolio, and let's see. Can I squeeze this out? I can. They gave it to me. All right, so I just squeezed out CVS 82.50 put for 17 Feb. I sold 3 at 91 cents. All right, so 3 of them at 91 cents. So let's go ahead. Let's trade number 59. 3 CVS 82.50, right? Yeah. 91 cents. So that gives me another $273. Nice. Okay, now so I'm at 1408. 1408. I still need to allocate. All right, now so in the meantime, looking at my comments over here. All right, thank you very much, Facebook user, but I need you to approve your profile. Is that you again, Andy? It seems like your kind of comments. All right, now, but one thing, I'm definitely glad that, coming into these sessions over here, all right, you have made some profits. Yeah, okay. I hope you have weighed your risk, right, and you're aware of it, but you made some profits. It's free. These sessions are free. I conduct it every Friday as best as I can. Yeah, okay. So I'm sure, Andy, you made a lot of money out of these sessions. Okay, now, so let's go ahead and load. All right, I'm not done yet. I'm still not done, ladies and gentlemen. All right, now, another stock I'm going to load today, MDT. Okay, all right, MDT. All right, it pays a 3.4% dividend. It's a boring company again. All right, and look, another depressed stock. All right, okay, it's been sold off from 135 down to 75. That's what? That's close to a 45% sell-off. All right, is the company making money all throughout the way? Yes, it is. And look, right, from where it is at the top, it makes about 138. How much does it make now? 130. Did the profits move in any sense? No. The stock is halved, all right, for the same amount of profits that it makes. All right, can you see what I'm trying to do over here? All right, do you think that there'll be limited downside versus an upside potential? All right, and this is a weekly chart. Can you see where's this stock trading right now? All right, a 3-year support level. All right, okay, 3-year support level. All right, and when I sell my put option, right, I can even pick. Yeah, I can pick the 77.50. All right, that's another 250 away. Yeah, okay, all right, now, so I'm going to do just that. Okay, so for this one, I'm probably going to pick up what? Yeah, let's pick up 3 as well. Done. All right, I just sold 3 of the MDT Medtronic 17 Feb 77.50 puts. I sold 3 of them for 118. All right, so it's done, it's filled. Yeah, okay. All right, so 118. So let's go. Trade number 60. 60. Did I get again? 118. All right, $354 now. So I'm all the way up, ladies and gentlemen. I started the session today with only $456. Yeah, okay, I remember about 25% mark, right? Where I am right now, I'm at a 75% mark, right? In fact, I'm more than that. I'm 80% mark. I'm what, $240 short, all right? I've got 3 more weeks to go. In fact, 4 more weeks to go, all right? I'm a happy camper, all right? Okay, so I can leave the last $200 to next week or the following week, all right? And for today, I'm all done. So where does this leave my portfolio? All right, I'm back to about $130,000, all right, $134,000, all right, okay, by expiry session today. Yeah. Now, so this is what, 111% over my portfolio capital, all right, and that's still a healthy position. Yeah. Okay, so for those of you who join me over and over again, I've explained this many times, right? Even if all my put option positions get assigned in stocks, right, my portfolio can own and hold up to $240,000 worth of stock. Yeah, okay, and right now my requirement is only 134,000, so I'm perfectly fine. Yeah. All right, now so that's a wrap. Okay, that's a wrap for my trading today. All right, and the logic is I did wanted to add a Google position, right, but because it's already up, right, by 4%, I'm not keen. All right, I want minimum downside. All right, and why would I do this on a stock that bounced up 5% today? All right, yes, it is depressed. All right, it is depressed. All right, but I don't want to take my chances. All right, I'm happy to wait. Like I said, I can wait for next Friday. Maybe it comes back down. All right, the market continues to sell off. It gets affected. All right, because it is a S&P 500 index component, right? So maybe next week I can reload one or two of these contracts. All right, but for today, no. It's a 4% upside. All right, I'm not going to trade it. All right, I'd rather exercise patience. Okay, now so I've wrapped up my trading. All right, okay. All right, thank you, Andy, for telling me. All right, so Andy is trying to tell all of you that he collected 170, all right, on 10 contracts. So Andy, following this trade, you made $1,700 US. All right, from something that's free. Applause. Thank you very much. All right, hit the like button, hit the share button. That's the least you can do for me, right, Andy? All right, now, so thank you very much. All right, now, so I'll be happy to entertain one or two questions. Okay, one or two questions before I wrap the session. All right, so if you have any questions for me, please go ahead. Yeah. So EL is asking, hey, Terrence, is it safe enough for me to sell the VIX? All right, put spread? No, I don't trade VIX anymore. Why? Because you must understand, you're not familiar with the VIX product. If you ever think of trading VIX options, right, you're killing yourself. All right, so stop doing that. All right, don't ever try to trade the VIX option if you're a retail trader. All right, I tried it tons and tons and tons and tons of times. Right, it'll always kill you more than the winning trades that you have. Why? Because VIX options, right, is marked not on the VIX stock. It's not marked on the VIX index. It's marked on the VIX futures. Yeah, okay, and that's where you're not aware of, right? And that's where people get killed. All right, VIX futures roll over every 2 weeks. All right, and what does it mean? Futures simply means that the current price will always be priced at a premium. But once it gets closer towards the expiry, right, prices will have no choice but to come down, right, to the par value. All right, and then when it rolls to the next one, right, you have that natural decaying cycle. All right, so you will eventually, all right, end up with something that is so far that you cannot recover from. All right, so don't do that. All right, forget it. All right, I won't even go anywhere near this at all. Yeah. All right, you have so many stocks to trade. All right, don't trade something that's this dangerous. All right, don't do it to yourself. All right, yeah, look at my screen right now. This is what you're trading. Yeah, okay, all right. If you're trading your VIX options, it is based on these products that you see over here. Yeah, okay, all right. Now, so don't do that to yourself. Okay, don't. Is that the only question from EL? I'm going to start my 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Thank you very much, ladies and gentlemen. Thank you once again for joining me, right, in this Facebook live sessions on Friday. All right, and okay, no matter how hard, all right, I try, all right, you guys are not going to hit the likes for me, right? Yeah. Okay. Now, so if let's put it this way: if I'm going to take my time, if I'm going to put in the effort and time to run these sessions, right? But okay, it's not achieving any positive outcome, right? Okay. Now that means, all right, you do not feel, right, that you like the content, right? You do not feel that you're benefiting from attending these sessions, right? Because there are many of you here right now. Okay, the number of attendance versus the number of likes that I see on the screen, right? It's far apart. All right. So it just signals to me that you probably don't fancy the information that I'm putting out and putting across. Yeah, so if that's the case, then Friday night, right, I may consider redeeming it, all right, for myself then. All right, I have done this for more than a year. Yeah, okay, so maybe it's high time, all right, I can redeem Friday night back to myself. Yeah. All right, so please don't stinge, okay? All right, if you can, do me a favor before you leave this Facebook Live session today, hit the like button, all right? And if you can as well, hit the share button, all right, so that we can get this information out to as many people in the public as possible, all right? Because I'm giving out this information free, all right? Am I placing the trades live? You saw it for yourself. I'm placing every single transaction that I talk about every week, right? When I run these sessions on the live portfolio. Yeah, okay, so these monies are real, these trades are real, right? The methods work in a real situation. It produces cash flow, it produces money. Yeah, all right, so, all right, do this for me, okay? All right, thank you very much, John. I appreciate this for letting me know. I appreciate you for letting the content, letting your comment show out over here. All right, I'm glad. Yeah, I'm glad. Yeah, okay. All right, like is thank you. Like is free. Yes, like is free. And it keeps my free session going for you as well. So why not, right? Yeah, okay. Right. Like for like. Yeah, okay, like for like. Okay, now thank you very much, ladies and gentlemen. All right, so I'm gonna end this week's session over here. All right, and as of now, I'm gonna continue to push forward. Okay, so I'll see you next Friday session over here. All right, I'll be back with you for another Facebook Live, and let's look towards adding, right, the remaining $250 for this month. All right, thank you very much, and happy Chinese New Year in advance, ladies and gentlemen. All right, I wish you a prosperous and more importantly, healthy, all right, healthy 2023. Okay, in the meantime, this is Terrence Tan, or I'm Possible Terrence, signing off. All right, bye for now, everybody. See you soon.